Hello everyone, this is Rachel live from 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Studios and you're watching the Market Movers. Let us zoom our lens on the Australian share market performance ahead of an important monetary policy meeting by the central bank that may determine its cash rate stance and approach towards bond purchases. The ASX 200 is trading cautiously ahead of the Reserve Bank policy meeting, while rising COVID-19 cases and lockdown measures also weighed on market sentiment. Australian shares opened higher today, boosted by energy and material stocks. Meanwhile, defensive healthcare and consumer staple sector are under pressure today. That's ahead of the RBA meeting. A dip in telecom, industrials and the IT sector are capping the overall gains. Economic data releases are closely guiding the market momentum this week. Market players are keenly eyeing the Reserve Bank of Australia's monetary policy meeting on the horizon today. Markets are on tenterhooks ahead of the RBA's monetary policy decision. The decision is expected at 2:30 p.m. Australian Eastern Standard Time. Speculations are rife that the RBA will gently rein in some of its emergency monetary stimulus to reflect the nation's powerful economic recovery. While the central bank is unlikely to move its cash rate, experts expect it to adopt a flexible approach to bond purchases. The central bank back in June has signalled it would extend its bond purchase programme beyond September. However, signs of broader economic recovery may embolden the RBA to slightly temper its stimulus. The central bank is likely to decide against rolling over its three-year yield target to the November 2024 bond from the existing April 2024 maturity. Such a move may emerge as an ultimate finish line for prevailing record low interest rates, while reflecting the RBA's continuing support for the economy to make sure recovery is lasting. Moving on now, today data showed Australian job ads extended their record-breaking run in June as demand for labour remained strong despite a round of coronavirus lockdowns across the country, a sign any drag on the economy will likely be fleeting. Additionally, yesterday's retail sales data grabbed attention after retail turnover topped forecasts in May with a rise of 0.4%. On the flip side, the recently released dwelling approvals data failed to impress as the number of dwellings approved declined by 7.1% in May. The fall was driven by a 10.3% decline in private sector houses. On the other hand, the US Fed minutes on Wednesday might determine the near-term market direction as investors look for insight into the thinking behind last month's hawkish shift in which Fed members projected a start to rate hikes in 2023. On that note, let us look at sectoral charter for Australia's share market in this segment. The energy sector clearly pulled the strings of the ASX 200 today. Energy stocks rose to their highest level in more than 2 weeks, helped by stronger oil prices after the organisation of the petroleum exporting countries called off talks on output levels. Shares in gas explorers Woodside Petroleum and Santos advanced. Beach Energy, Whitehaven Coal and Oil Search stood among the top 5 ASX 200 gainers. Mining stocks rose a day after benchmark Chinese iron ore futures jumped 5% on rising demand as mills in steel hub Tangshan resumed production. Heavyweight miners, the BHP Group, Rio Tinto and Fortescue Metals traded in the green zone, defying Chinese crackdown on the metal trading. Mining players Pilbara Minerals and IGO stood among the top ASX 200 gainers. Additionally, the banking sector gained on the board ahead of the RBA meeting. Shares in the country's second largest lender, the Westpac Banking Corp, rose almost 1% after saying it would sell its New Zealand life insurance business for 400 million New Zealand dollars. Westpac announced on Tuesday that it's agreed with Fidelity Life Assurance to sell Westpac Life NZ and enter into an exclusive 15-year agreement for the distribution of life insurance products to Westpac's New Zealand customers. Other big banks like the Commonwealth Bank, ANZ and the NAB also inched up. Meanwhile, the IT sector shares slid lower, with shares in Appen, Afterpay and WiseTech Global trading in the red zone. Healthcare players remained under the spotlight today. On one hand, Ramsay Health Care soared with rising cash after their Spite Healthcare for £2.50 per share. On the flip side, Clinuvel Pharmaceuticals and PolyNovo stood among the top ASX 200 losers. Now it's time for a very short break, but stay tuned. I'll be back with more trending updates for the Australian market.
Hi, this is Andy Liu broadcasting from 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Media Studio in Australia, and I'll be hosting the new 𝐊𝐚𝐥𝐤𝐢𝐽 Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to 𝐊𝐴N TV and join me.
A very warm welcome back. This is Rachel, your host, live from 𝐊𝐴N Studios, and you're watching the Market Movers Show. Moving on, next in our show, let us look at some ASX listed stocks under the spotlight today. To begin with, emerging buy now, pay later player PayRight. Their shares jumped on a record June quarter. The June quarter's gross merchandise value of PayRight has grown by 134% to $26 million. Meanwhile, the company added a record 6,000 new customers in the fourth quarter of financial year 2021. This was much ahead of guidance. The total customers were recorded as 53,400 as of June the 30th, up by 58% on the previous corresponding period. UK-based sustainable building materials and construction solutions business Calix and Tarmac have executed a memorandum of understanding to develop a calciner for lime production with carbon dioxide capture. Calix says the MOU outlines intent of parties to conduct feasibility and front-end engineering design studies on the project. Next stock under the spotlight is Carnarvon Petroleum. Their shares jumped on forming a joint venture to produce renewable diesel. The oil and gas explorer announced it's established a joint venture with Frontier Impact Group to produce renewable diesel and other sustainable products. Each party will own 50% equity in the JV, with Carnarvon set to invest $2.6 million in seed capital to enable the first project to reach financial close, which is expected by early 2022. Shares in real estate investment trust Abacus Property Group slid after they purchased letting space amounting to $160 million from Storage King. The 5 locations span more than 25,000 square metres in net lettable area and include storage centres in Chatswood, Artarmon, St Leonards, DY and Pymble. The deal is set to settle on August the 3rd, funded from existing debt facilities. Moving on, shares of gold miner Ramelius Resources hit a 2-month low after a gold production miss. The company's recorded full-year gold production of 272,109 ounces, below its guidance range of 275,000 to 280,000 ounces. The miner mentioned that numerous rainfall events and COVID-19 lockdown restrictions hit production from the Edna May Production Centre in WA. That's all from now. Stay tuned for more live updates on 𝐊𝐴N TV across the economy, markets and sectors. I'm Rachel, signing off for now.